UPS stock presented earnings earlier today, and the stock went up roughly 10%, only to come down right after that first peak. So the big question remains, what happened and is UPS stock in the buying range after these earnings? If we zoom out a little bit, we see that UPS stock has seen a pretty tough year, with a 13% decrease in stock price, massively underperforming the overall market, who has seen a 22% increase in ticker price. And one of the main reasons to like UPS is of course the dividends, currently hovering around 5% dividend yield. And the growth stats are also pretty impressive if you ask me. But again, let's compare the total return with the S&P 500. And then we see that UPS has half of the return in the past 5 years, and this is including this dividend. So coming back to the main question from earlier, is UPS stock a buy right now? Well, by the end of the video I will give you my 3 price targets, so make sure to stay tuned and see how I build up to these price targets. First, let's dive in the earnings to see what happened. In here we see that UPS beats on both the EPS and revenue estimates by the analysts, which is quite impressive since all analysts were expecting a miss. Looking at the actual results, we see that revenue was reported at 22.2 billion, and UPS finally managed to increase their revenue again. In total, revenue increased nearly 6%. And take a look at the operating profit and operating margin. Both increased quite a lot, which is really impressive. EPS is also looking really good, in line with the operating margin increase. For the full year of 2024, it is also looking pretty interesting, with an expected revenue of 91 billion, which is still lower versus their all-time high revenue, but it is increasing again. And operating margin is also expected to increase even further from here. In this graph we see why the results are finally better. UPS managed to finally crack the code and increase their logistics shippings again, which started during June. Looking at Europe, we also see that they are getting momentum again. So it is expected that in the upcoming quarter UPS will do even better based on this trend line. Looking at the smaller segment, supply chain solution, we see that this segment is growing in revenue, but is really struggling with the margins. The revenue growth was driven by the impact of MNX acquisition. And now that we know a bit more about the company, it is time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analyses every week. And also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue by diving into the fundamentals. UPS is a 117 billion market cap company. PE ratio is at 22, indicating that they are trading around their fair valuation. Later in this video, I will show you my 3 price targets for UPS stock, so make sure to watch until the end. Revenue is at 89 billion, and in this graph we see that revenue went up in the long run. Especially during the lockdown periods, revenue really took off. But as of lately the revenue was slowing down, up until today, where it is finally increasing again. Gross margins were increasing for a decent amount of time, but most recently they are decreasing, and the same goes for the operating margin and net margin. Luckily, in the earnings, we saw that margins were increasing again, so let's keep an eye on this number. Looking at the EBITDA margin, we see that this is also decreasing, but again, the earnings were finally showing an increase again. The EPS is going up and down a lot as well. And again, in the earnings, we saw that this number is increasing, which is the good part. Analysts expect that the rest of 2024 will still be a bit rough, with a total of minus 16% growth for the EPS. From 2025 on, it is expected to see pretty high growth in EPS. For the revenue, it is also looking pretty interesting. It is expected that 2024 will be a bit tough, and from 2025, it is expected to report a steady growth again. Return on assets is sitting at 7.5%, which is a decent number. Return on equity looks really good, and the most important number, return on invested capital, is sitting at 15%, which is a great number. It is lower versus the 5-year average, but this is also including the lockdown periods, which were great times for UPS. Current ratio is at 1.25, which is a decent number. Nothing really special to mention here, to be honest. Right now, UPS has 26 billion in debt, and I prefer companies that can pay down at least a big chunk of their total debt with the total cash. UPS has 6.5 billion in total cash, so they can't pay down a decent amount of their debt. I would love to see lower debt or higher cash here. So it is very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends and all other things. And here we see that free cash flow is going up in the long run, which is looking pretty good. But it is not really steady and consistent, so keep an eye on this number as well. Shares outstanding are decreasing, which is something that I really like. When shares outstanding are decreasing, it increases your ownership in the company, increases the EPS, lowers the PE ratio, and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, dividend yield is at 5%, which is an insane number. Annual payout is at $6.52. Payout ratio is around 90%, which is way too high in my opinion. This is definitely something to keep your eye on. You want this number below 50%. The 5-year growth rate is at 11%, which is a great number. On top of that, they have increased the dividends for 14 years in a row. In here we see that UPS did increase the dividends at a decent pace historically. And in 2022 there was a big spike. From there, it is increasing at historical pace again. As of lately, the payout ratio is heavily increasing, which is not good. So definitely keep your eye on this number. In this graph, we see the expected dividends in 2024, 2025 and 2026. Of course, this is an estimation and can be highly impacted by results, but it gives you a rough indication. It's expected to increase at a decent rate from here. Overall, these dividends look really good to me, but how about the historical returns? I decided to compare UPS stock with the overall market, in this case the S&P 500. Next to that I added FedEx. On the 5-year chart we see that UPS underperformed the S&P 500 big time. And keep in mind this is including dividends. FedEx also underperformed the S&P 500, but came pretty close. Another interesting thing is that UPS managed to beat the S&P 500 for quite some time. But ever since late 2023 they started to underperform the S&P 500. On the 1-year chart it is getting quite messy with a minus 7% return for UPS. And the S&P 500 crushing both stocks. On the 6-month chart it is no difference, with again the S&P 500 crushing both UPS and FedEx. On the 1-month chart we finally see UPS gaining momentum again, mainly driven by today's earnings. Bottom line, in the past 5 years the S&P 500 was by far the better choice here, but most recently it is looking pretty interesting for UPS. So could this be the perfect time to buy UPS stock? Well, let's check the 3 price targets that I created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. For the revenue growth I'm filling in 3, 5 and 7%, based on historical performance, their own outlook, but also because of the analysis. For the profit margin I'm putting in 8, 10 and 12. For the free cash flow margin I'm putting in 6, 8 and 10. For the PE ratio, I'm putting in 18, 20, and 22. For the price to free cash flow, I'm putting in the same numbers. My desired annual return is 12.5%, since I can get an easy 10% average annual return with owning an ETF. Right now, UPS stock is around $137. I hit analyze, and we see a lot of green numbers. We have a low price target of $84 to $112. We have a mid price target of $138 to $172. And we have a high price target of $213 to $255. And to me, the mid price target is the most justified here, indicating this stock is undervalued. So what do you think is the most justified price target here? Let me know in the comments down below. My final conclusion on UPS is that this is getting really interesting. The company is recovering and the stock was hammered down a lot. Is it a buy right now? Well, that depends on how you look at the numbers. In my opinion, they are looking undervalued, and the fact that dividends are also looking really interesting is something to consider. But of course, there are some risks. UPS struggled in the recent quarters with growing the business. It seems they have found the solution to pick up the pace again. But all the assumptions in the price targets are relying on growth. So if UPS fails to grow the business again, then the valuation is completely different. On top of that, debt is something to keep your eye on, since their free cash flow position isn't really steady and consistent. Something you would expect with a company like UPS. For now, I'm putting UPS on the buy list and see in the upcoming days or weeks what happens with the stock. And remember to always do your own research and never fully trust what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and it did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.